If I could go back and start all over, I would just use this one simple strategy. I spent 2 years as a beginning trader jumping from strategy to strategy, trying to find the holy grail of trading. And it wasn't until I just simplified things and dumbed it down to this one simple strategy that things really started to click for me and I saw great results. So if you want to make money in the markets but you don't know where to start, or you've been trading for a while and you're struggling to find any type of consistency, then this video is definitely for you. So where I start my process is finding areas of interest. The areas of interest I'm looking for are on the 1 hour time frame. I use this time frame to spot areas of support and resistance. And what I'm looking for is areas where price has rejected more than once. So just looking from right to left, I see that price has had trouble breaking through here. Okay, it stopped here a couple of times, once and then twice, and actually moved pretty deep down. And then also back here, and then moved pretty deep down. And then it's also rejected down here once, twice, 3 times, 4 times, 5 times. Okay, and from each of these, it's moved up a pretty decent amount. Okay. So what I'm going to do now, get rid of all these drawings, is I'm just going to find a couple of points and I'm going to draw a big zone that captures this area up here and this area down here. So when price gets back to one of these areas, that's when I'm going to be looking for potential buy or sell opportunities. If price gets back down to this area, I'll be looking for an opportunity to go long. If price gets into this area, which it already has broken through, so what I would be looking for is for price to actually come, since it's broken through, come back down and test this area, and then I'd be looking for a long opportunity here as well. So why areas and not levels? So what I found in trading is that price will sometimes stop exactly at a certain price level, but it doesn't happen very often, and it doesn't happen with a ton of consistency. For me, it's more important to find a general area where price is going to reverse, and then keep an eye on price action patterns that will actually tell us that price might be reversing soon, rather than just looking for a specific price and taking a trade exactly when the market hits that price. What do you do when price gets to your areas of interest? You wait. One of the most important things that you can do as a consistently profitable day trader is show patience. You don't want to take a trade just because the market gets to your certain price or just because it gets into an area of interest. You want to make sure that you are taking just only high quality setups. Let's talk about trend lines. So once we've looked at the higher time frame, which is the 1 hour time frame, and found our areas of interest, the next thing is to do is to go down to a lower time frame. I like to use the 1 minute time frame, and find trend lines. Now, why do we go from a 1 hour to a 1 minute? The reason is price changes from inside out. So what you see on a larger time frame, like the hourly, in our scenario, is a bunch of big bars, but there's a lot going on inside of those hourly candlesticks. So I like to look at a 1 minute, sometimes a 5 minute time frame, to see what's happening within those 1 hour candles. You get a lot more detail and a lot more of a feel of what is happening, so you can make better educated decisions on your entries and on your exits. What I'm looking for next is I'm looking to find a trend line, because I eventually want to see that trend line break. So what makes a trend line valid? So traditionally, traders say that you need to connect just 2 points on a chart to make a trend line valid. So this would be a point, and this would be a point. And they would qualify that as a valid trend line. For my style of trading, I like to be a little bit more conservative. And I like to say that a trend line needs to have at least 3 points connecting to be a valid trend line. What that does is it helps me avoid over trading. If I have a trend line and I only require 2 points, it's a lot easier to find a lot of trend lines on a chart. And you can see that. I'll just go through and find a bunch of 2-point trend lines. And you can see, you can find a ton of them. Okay. So for my style of trading, again, I want to take less trades because I find when I trade more, I tend to overtrade and I tend to end up losing. Okay, so what I'm looking for is trend lines where we have 3 points that connect on the chart. Okay, so there's a point right here, there's a point right here, and there's a point right here. And I do like the trend line to actually go through all 3 points on the chart. So it touches right here, it touches right here, and it goes through here, and that's okay. Just like the zones that we draw for support and resistance on the 1 hour time frame, you should think of your trend lines more as areas. So it's okay if price breaks through like it does right down here. That's fine. What you want to see is the 3 points are connected, a little bit if the trend line is broken a little bit, that's still fine. How do we know when a trend line is broken? So if we find a point here, let's see, right here is a 1 point, a swing low, another swing, and another swing. We have a valid trend line right here. We have 1 touch, 2 touch, 3 touch, 4 touch. And then on this 5th touch is when we see the trend line break. And what I like to see to confirm that a trend line is broken, I like to see a strong break through price. And you can see right here that price broke very strongly through. Okay, so that signals to me that we have a broken trend line. Okay, I don't want to see a weak break through the trend line. For instance, this candle right here, it did break down below the trend line, but it didn't close below it. This candle here as well, it did close below the trend line, but it wasn't very convincing. This is not a very convincing candle. It's got a wick to the bottom, it's got a wick to the top, and it's not a clear sign that the trend line is broken. This big bearish red candle is a clear sign that the trend line is broken. And I'm not trying to just get in short as soon as the trend line breaks. The trend line break is just part of the formula for this trading strategy. What do you do when a trend line is broken? Again, same thing that you do when price gets to your area of interest, you wait. Again, can't emphasize this enough. One of the most important things that you can do as a beginning trader or any trader at all is show patience. So once a trend line is broken, it doesn't mean that you just enter the trade blindly. You still want to see a little bit more confirmation, and that's what we'll get into next. The next thing is entry. So once the trend line has been broken, how do we know when to enter the trade? What I look for are continuation patterns. So continuation patterns can be bear flags, they can be bull flags, they can be pennants, they can be head and shoulders patterns. My favorite personal pattern to look for after a trend line break is a bull flag or a bear flag. So in the case that we're going short, because we have a uptrend line here that has been broken, I would be looking for a bear flag after the trend line break. And here you get one. And what I would do here is take this bear flag, get short as soon as it broke down. I would have my stop loss just above the top of the bear flag. My entry would be down here, and my target would be probably this swing low right here. Okay, it's a pretty quick trade, trend line break, bear flag setup, and breakdown, and we would be looking at about 1.88 to 1 risk to reward ratio, which is not too bad. You know, I would like to get closer to 2, but anything over 1.5 is pretty good. Here we have a little bit more of an aggressive entry. We have a trend line that formed here that was broken. And then we do have a little bit of a flag pattern right here. It's more of an ascending triangle, but this would also be a great entry. The downtrend line was broken. We have a little bit of a consolidation, and then again, my entry would be on the breakout of this flag, or you can call it ascending triangle. Stop loss would be roughly down here. Profit target would be up here somewhere, which would be just above the high of the day. And that kind of a trade would set you up for, let's see, that would be roughly a that'd be roughly a 1.5 if you held it. Definitely more than a 2-to-1 trade on this day, but that would be the setup right there. We'll get into exits and stop losses in a later video, so that's it for now. Basically, this one simple strategy that we just went over has been making me about $400 to $500 per trading day. If you extrapolate that over a year's time, that's about $8,000 to $10,000 a month, or about $100,000 to $120,000 a year. And I don't know about you guys, but an extra $8,000 to $10,000 a month just taking a one simple setup consistently every single trading day when it appears is pretty great. It's pretty easy work for a pretty big reward. Anyways, I hope you guys enjoyed this video. If you have any questions, please comment down below, and please like and subscribe.